The headlines are celebrating a swift victory, a decisive military operation. They're calling absolute resolve. The media is obsessed with the battle, but they are missing the real story. While the world watches the soldiers, a silent economic war has already kicked off. A war that won't be fought with tanks and jets, but with oil barrels and shipping lanes. And the first casualty is going to be your wallet. This is the story of how a secret war is about to trigger a global oil shock, and what that will mean for the price of everything you buy. Section 1. The Anatomy of a Decapitation Strike. On January 3, 2026, while most of us were still shaking off the new year, an unprecedented military operation unfolded in the heart of South America. Codenamed Operation Absolute Resolve. This was some clumsy invasion or a long, drawn-out conflict. It was a decapitation strike, carried out with terrifying precision. In the pre-dawn darkness over Caracas, a massive force of over 150 American aircraft, including F-22 Raptors and B-1B Lancer bombers, seized total control of the skies. At the same time, U.S. Cyber Command launched a targeted attack, plunging key parts of the Venezuelan capital into a blackout. The target was Fuerte Tiuna, the fortified military complex that served as Nicolás Maduro's seat of power. On the ground, elite units from the U.S. Army's Delta Force and the 160th Special Operations Aviation Regiment, the legendary Night Stalkers, descended on Maduro's compound. The entire raid took less than 30 minutes. By the time the sun came up over Caracas, President Maduro was in U.S. custody, whisked away to face narco-terrorism charges in a New York federal court. According to U.S. officials, there were 0 American casualties. The official justification from Washington was quick and clean. This was a law enforcement operation. The White House pointed to long-standing indictments against Maduro for turning Venezuela into a criminal enterprise. And yet, in the hours that followed, a different story began to take shape, one that pointed away from the courtroom and toward the oil fields. President Trump was explicit about the operation's economic angle. He talked about American oil companies going in to rebuild Venezuela's shattered industry, and said the country's own oil reserves would pay for the intervention. He even suggested the U.S. would run the country for a while. These aren't the words of a president just focused on a legal indictment. They are the words of a leader focused on resources. Specifically, oil. Let's not forget, the world's largest proven oil reserves, over 300 billion barrels, are right there, under Venezuelan soil. For decades, that immense wealth has been crippled by mismanagement and corruption, and more recently, by crushing U.S. sanctions. Production that once stood at around 3.5 million barrels a day in the late 90s had collapsed to less than 1 million by the end of 2025. The media, fixated on the dramatic military action, mostly missed the subtext. They reported on the raid, the political fallout, and the angry condemnations from rivals like China and Russia. But they didn't connect the dots between the military strike and the quiet panic starting to ripple through the world's most critical market. Operation Absolute Resolve wasn't just about removing a dictator. It was about fundamentally redrawing the global energy map. And the aftershocks were about to be felt not in the halls of power, but at every gas station, every grocery store, and in every household budget on the planet. The real war, the economic one, had just begun. Section 2. Act I. The immediate shock. The first tremor hit the markets before most people had even finished their morning coffee. It didn't arrive as a dramatic crash, but as a sharp, vertical spike in the one number that underpins the entire global economy: the price of oil. In the after-hours trading that followed the news of Maduro's capture, Brent crude, the global benchmark, shot up. Just before the operation, oil prices were in a slump, with Brent hovering around $60 a barrel, mostly due to forecasts of a supply surplus in 2026. But in a matter of hours, geopolitical fear completely wiped out those economic forecasts. Brent jumped by about 8%, rocketing to $92 a barrel. West Texas Intermediate, the U.S. benchmark, did the same, climbing around 6% to $88. So, Why such a violent reaction? On the surface, it doesn't seem to make sense. Venezuela's production was already tiny, accounting for less than 1% of the world's oil output. A disruption there shouldn't logically send the whole market into a panic. But markets aren't logical. They're driven by fear and uncertainty. And Operation Absolute Resolve had just injected a massive dose of both into the system. The first fear was about immediate physical disruption. While U.S. officials kept calling the strike surgical, the operation still involved hitting air defense sites and military bases. Traders immediately priced in the risk of collateral damage to nearby oil infrastructure. More importantly, there was the risk of sabotage. With Maduro gone, the fear was that loyalist factions could retaliate by blowing up key assets, especially in the Orinoco Belt, the heart of Venezuela's production. Even a small drop in Venezuela's already low output could have a huge effect on a market that was finely balanced. This reaction is what traders call a geopolitical risk premium. Think of it as an invisible tax that gets slapped onto the price of oil whenever instability threatens a major producer. We've seen this movie before. The 1973 Yom Kippur War led to the Arab oil embargo, causing prices to skyrocket by nearly 300%. The 1979 Iranian Revolution triggered the second oil shock of the decade. The market has a long memory, and the raid on Caracas brought back echoes of these past crises. Analysts at Goldman Sachs quickly warned that if the power vacuum in Venezuela led to civil unrest, oil could easily breach the $100 per barrel mark. Beyond the immediate fears, there was a deeper reason for the price spike. Venezuela's oil isn't just any oil. It's mostly heavy and sour, a specific grade that complex refineries, like those on the U.S. Gulf Coast, are built to process. For years, those refineries had been forced to find other sources after sanctions choked off Venezuelan supply. The removal of Maduro didn't just represent the potential loss of 1 million barrels per day. It signaled a sudden, chaotic shift in the status of the world's biggest reserves. The operation also created massive uncertainty for Venezuela's main customers, China and India. About 80% of Venezuela's oil was flowing to China, often as a way to pay back tens of billions in loans. The U.S. intervention threw all of that into complete disarray. Would a new U.S.-backed government honor those debts? Would it keep shipping oil to a strategic rival? Suddenly, China was facing the loss of a major source of crude, forcing it to compete for barrels on the open market and pushing prices up even more. The market was now wrestling with a dizzying number of questions. What was once a state of predictable decline, under Maduro had become a total black box. Would the country fall into a civil war, sending production to zero, or would a new government stabilize things quickly? This level of uncertainty is poison to markets, and the price surge was the fever. Wall Street's fear gauge, the VIX, spiked to 28, its highest level since the 2024 elections. This wasn't just about oil anymore. It was about the risk to the entire system. And as the shockwave rippled out from the trading floors, it began its inevitable journey toward the real economy and straight toward your cost of living. Section 3, Act Roman 2, the economic fallout hitting your wallet. The jump from $60 to $92 for a barrel of oil sounds abstract, like a number that only matters to Wall Street traders. But the path from that trading screen to your wallet is frighteningly direct. The economic fallout from Operation Absolute Resolve isn't a theory. It's a chain reaction of price hikes that will touch almost every part of your daily life. Part 1. The gas pump, your first bill. The most immediate and obvious impact is right there at the gas pump. The price you pay to fill your tank is directly tied to the price of crude oil. Refineries buy crude, process it into gasoline, and sell it to distributors. When their main cost surges by over 50% in a few hours, that increase gets passed down the line with brutal efficiency. Let's break it down. A barrel of oil is 42 gallons. A good rule of thumb is that refiners can get about 19 to 20 gallons of gasoline out of a single barrel. The rest becomes diesel, jet fuel, and other products. When the price of that 42-gallon barrel jumps by over $30, as it did after the raid, the cost to make a single gallon of gas goes up right along with it. This increase isn't instant, but it's close. Gas stations have a buffer of a few days with the fuel already in their tanks, but as soon as they need to order their next delivery, they're paying the new, higher wholesale price, and that cost is immediately passed on to you. Within a week or so of a crude price shock like this, you can expect to see a big jump at the pump. A $1.30 increase per barrel can translate to a 60 to 75-cent increase per gallon of gasoline. For an average family, that's an extra $1.10 to $1.15 every time they fill up the car. The cost of the daily commute, the school run, and the trip to the grocery store just got hit with a tax from a military operation thousands of miles away. Part 2. The ripple effect, the price of everything. That first hit at the pump is a direct blow, but it's only the beginning. The same oil that becomes your gasoline also becomes the diesel that powers our entire supply chain. Think about how almost everything you buy gets to you. It's made in a factory, loaded onto a truck, driven to a warehouse, loaded onto another truck, and driven to the store. Every single step of that journey runs on diesel fuel. When the price of diesel climbs, a trucking company's costs skyrocket. They don't just absorb that loss, they raise their shipping rates. Suddenly, the cost to transport a pallet of cereal, a crate of TVs, or a shipment of clothes goes up. The cereal maker, who now pays more to ship their product, passes that cost to the supermarket. The supermarket, in turn, passes it to you. The price of your breakfast just went up, not because of a bad harvest, but because of a special forces raid in Caracas. This spreads to everything. Air travel gets more expensive because jet fuel prices spike. That vacation you were planning just got a little further out of reach. The cost of your free Amazon delivery is no longer free. It's just baked into the price of the products or the subscription fee. Even food staples are hit. Modern farming is incredibly energy intensive. The tractors, the harvesters, the irrigation pumps, they all run on diesel. Higher energy costs mean higher food production costs, which means higher prices at the grocery store. This is the sneaky nature of an oil shock. It's a hidden tax on everything. It doesn't show up on your receipt, but it quietly inflates the price of almost everything you buy, draining your disposable income. Part 3. The market contagion, your 401k, and the fear index. While the effects on your daily expenses are direct, the fallout also hits your long-term saving. The stock market hates uncertainty, and an oil shock is one of the biggest forms of uncertainty there is. Right after the raid, S&P 500 futures dipped 1.5%. That's a risk-off signal where investors flee from stocks and rush to safe havens like the U.S. dollar. The pain isn't spread evenly, though. Airline stocks and transportation companies get hammered because their fuel costs just exploded. Companies that depend on people spending money on non-essentials also suffer, as investors bet that people will have less cash after paying more for gas and food. On the flip side, some sectors win. Energy stocks rallied 4%. Defense contractors like Raytheon and Lockheed Martin saw their stocks jump, as the operation served as a showcase for their high-tech hardware. This volatility directly impacts your 401k. Your retirement account can swing wildly as the market tries to make sense of this new, unstable reality. A single bad day isn't a disaster, but high oil prices that stick around can drag down the whole economy. Historically, major oil price shocks have often been followed by recessions. The 1973 oil crisis helped trigger the painful recession of 1973-75. When energy costs rise this dramatically, it acts like a brake on economic growth. This is the fear that grips investors and can lead to a sustained bear market, chipping away at the value of your long-term savings. The crisis started in Caracas, but it has found its way into every corner of your financial life. We are living through the immediate aftermath of a world-changing event, and the story is unfolding by the hour. We believe the only defense against uncertainty is knowledge. Our job is to cut through the noise and show you how global events directly impact your finances. If you believe in that mission, take a moment to subscribe and click the notification bell. It helps us continue to do these deep dives. And let us know in the comments, What's the first economic impact you're noticing where you are? Your reports from the ground are a huge part of this community's collective intelligence. Section 4. Act Roman 3. The new reality. The immediate economic shock is a violent but simple chain reaction. The long-term consequences are far more complex. We are entering a new reality where the geopolitical chessboard has been flipped over and the future of global energy is being rewritten. This new reality will be defined by what happens inside Venezuela and the high-stakes game now playing out between global powers. Part 1. The fate of a shattered nation. For Venezuela, removing Maduro isn't an automatic fix. It's the start of an even more dangerous chapter. The nation is already a failed state. Its economy has shrunk by an estimated 75% since 2013. Into this chaos, Operation Absolute Resolve has introduced a massive power vacuum. There are now two very different possible futures. The optimistic scenario, the one U.S. officials are hoping for, is a rapid stabilization. A U.S.-backed transitional government, perhaps led by an opposition figure, quickly takes control. The U.S. and its allies lift the sanctions that have strangled the oil industry. With tens of billions in new investment from companies like Chevron, the slow process of rebuilding the country's decayed oil infrastructure could begin. Some analysts believe that within 2 years, production could be restored to 1.5 million barrels per day. In 7 to 10 years, it could even return to its peak of 3.5 million barrels a day. This would completely rebalance the global oil market and could lead to lower prices for the long term. But there's a much darker, and many would say more likely, scenario. History teaches us that forced regime change, like in Libya and Iraq, rarely leads to a quick and stable oil supply. Removing the man in charge can unleash chaos. In Venezuela, this could look like a multi-sided civil war between Maduro loyalists, narco gangs, and various political militias, all fighting for control of the oil fields. In this scenario, instead of being rebuilt, the oil infrastructure becomes a target. Sabotage and fighting could send what little production is left plummeting to near zero. The humanitarian crisis would explode, potentially destabilizing the entire region. The dream of a rebuilt Venezuelan oil industry would be replaced by the nightmare of a resource war, creating a permanent risk premium on oil prices. The country's fate and the direction of global energy prices hangs in the balance. Part 2. The global chessboard, a new Cold War. The fallout from Operation Absolute Resolve goes far beyond Venezuela. It has sent shockwaves across the planet, forcing a reset of alliances and rivalries. This isn't just about Venezuela. It's about the U.S. reasserting its dominance in its own backyard and how its rivals are responding. The most immediate losers are China and Russia. For years, they propped up the Maduro regime for cold, hard strategic reasons. They poured billions into Venezuela in exchange for discounted oil and a valuable strategic foothold in the Western Hemisphere. The U.S. intervention has threatened to wipe those investments off the board. A pro-Western government in Caracas means their claims to Venezuelan oil are now in serious doubt. Their angry condemnations are not just rhetoric. It's the sound of two global powers who have just been outmaneuvered. This creates a dangerous new dynamic. China might see this as a test run for a potential U.S. intervention in its own sphere of influence. Russia, having lost a key partner, may look for other places to challenge U.S. interests. The intervention has amplified the feeling of a new Cold War, a global competition for resources and influence. For other oil-producing nations, the situation is complicated. In the short term, OPEC Plus members might enjoy the higher prices, but the long-term prospect of a revived Venezuela pumping millions of barrels back onto the market is a major threat to their ability to control prices. For oil-importing nations in Europe and Asia, the short-term price shock is a major headache. India, for example, has refineries optimized for Venezuela's heavy crude and would gain huge benefits from a reliable new supply source. But first it has to survive the immediate storm. The new reality is one of intense tension and radical uncertainty. The United States has made a high-stakes bet, using military force to reshape the global energy map. The world is now watching to see if this gamble pays off with a stable Venezuela that lowers gas prices, or if it backfires, plunging a region into chaos and igniting a new era of great power conflict. Operation Absolute Resolve was a 30-minute military masterclass, celebrated as a clean, surgical victory. But its true impact is only now emerging, measured not on the battlefield, but by the numbers ticking up at the gas pump, the rising cost of your grocery bill, and the volatility shaking your saving. The media may focus on the political drama, but the fundamental truth is this: the real war is, and always has been, economic. This operation wasn't just about changing a regime. It was about seizing control of the world's largest pot of black gold, and in doing so, gambling with the stability of the entire global economy. We stand at a fork in the road. One path leads to the future Washington promised: a rebuilt Venezuela, its vast oil wealth unlocked, leading to lower prices for everyone. The other path leads to a darker place: a nation torn apart by civil war, a humanitarian catastrophe, and a global oil shock that could tip the world into recession. The headlines will fade, but the economic consequences will stick with us. The critical lesson here is that, in our interconnected world, a secret war fought thousands of miles away is never truly secret, and its costs are always brought home. The ultimate question is no longer about the battle that was won, but about the economic war that is just beginning, and the price that we will all be forced to pay.